like to now introduce Joseph. Joseph is CTO for International Financial Service Center Authority, IFSCA, a unified financial sector regulator for IFSCs, established as statutory authority by Government of India. He's a senior technology leader driving fintech, supervisory technology, SupTech, and other strategic initiatives, including contributing to fintech agenda at India-UK Financial Partnerships, India-US Financial Regulation Dialogue, India-Japan Microeconomic Policy Dialogue, joint working group at fintech between India and countries, namely Singapore and UK, Global Financial Innovation Network, GFRN, and Interregulatory Technology Group, IRTG, on fintech under the Financial Stability and Development Council Subcommittee, FSDC-SC. Fintech bridge with overseas regulators, among the others, are key areas that he looks into as well. Prior to this stint, he was part of management team that co-founded the Reserve Bank of India's technology subsidiary, which is Rebit, and he has worked extensively on RBI's technology vision and information technology subcommittee on center board of RBI. He was associated with numerous technology projects and initiatives for RBI of Reserve Bank of India across 25 departments. He was member of more than 20 plus technical advisory groups, committees and subcommittees at Reserve Bank of India. Prior to this, Joseph had been working at Infosys at various leadership roles. I'm delighted to have him as a panel member today, and I will now hand over this to Joseph to give us a very brief overview about what IFSCA is and eventually what unified regulator is and how unified regulators are playing, or regulators playing a key role into the innovation at India country level as well as in the region. So to Joseph for the brief introduction, and then we'll start with the Q&A and the session, interactive session on various questions.
Thank you so much, Prashant, for having me here. Good afternoon, good evening. I hope that is the time zones we are covering here with India and Philippines. There's no good mornings at the moment, but really happy to be in this forum. The Innovate 365 event. Really impressive to see how organizations like FIS takes innovation to the next orbit. So pretty happy to be here. Now, jumping into your question on IFSCA, the unified regulator, I think I need to step back and give the context. So the government created something called as an IFSC, International Financial Services Center. Why did it create one? Because there was flight of capital and talent to offshore locations. So today, people pick up their bags and go to Dubai, Singapore, because it's a tax regime which is very favorable, infrastructure, investors, a lot of positives. So what the government thought was, the government of India thought was, hey, we need to create a jurisdiction like that in India. So that's when they zoomed into Gandhinagar in Gujarat, a place called Gift City. So within Gift City, there is a domestic tariff area, which is the domestic India. That's what I would refer to. And then there is a special economic zone, like any other special economic zones in the country. Within the special economic zone, the government carved out an area and called it IFSC, International Financial Services Center. Now, what does that mean? That is a foreign jurisdiction. You transact in dollars or foreign currencies. The rupee does not work there. So essentially what it means is within India, you have a jurisdiction which is like an offshore, right? Because it's all foreign currencies. So it's like getting a small Dubai or Singapore here within India. So that was the idea of creating an IFSC. And initially the four domestic sector regulators, namely the RBI, the Reserve Bank of India, SEBI, IRDI and PFRDI, were kind of regulating that space. So if a new bank has to come and be set up in this international zone, RBI used to give the license. If an exchange has to come in, SEBI will come and do it for the capital markets. If an insurance guy has to come, IRDAI, and so on and so forth. But then for the ease of doing business and so on and so forth, the government in 2019 passed, through an act of the parliament, created a new unified regulator. And that is IFSCA, the authority. So IFSC's authority, the new regulator, which has the powers of RBI, SEBI, IRDA, and PFRDA. That's why it became unified, was created. And I think we started operations in, little past the middle of 2020. So it's a very relatively new regulator. So India has 5 financial sector regulators. The 4 are domestic, and the 5th one is this unified regulator. Now, going to that unified regulator concept with this background, if a fintech comes with a banking solution, service, product, we know RBI could take care of it, digital lending, for example, or neobanks. If there is a capital market related stuff, then probably SEBI is there. If an insurtech comes, then IRDA is there, and so on and so forth. But when you have a unified regulator, typically today you have embedded insurance with digital lending, and soon the fintech becomes a super app. So when you straddle across different regulators' domain, it becomes very difficult. And that's why this unified regulator concept becomes very powerful. So IFSCA is the unified regulator for the IFSC. We have the first IFSC in GIFT City today, and we might have more in the future. And this is a foreign jurisdiction. And being a unified regulator, for any bank to come and set up in this jurisdiction, IFSCA gives the license. For stock markets, brokers, the exchanges. Again, IFSC is the person giving the approval. Same for insurance companies and for pension funds. So basically, what essentially it means is it's a unified regulator. But then the real power comes in when you're talking about the cooler things which we need to really be working on. For example, climate or things related to green and sustainability. These are not boxed by a banking domain only or a capital markets domain only, right? These cut across. So being a unified regulator, if a green fintech comes into the fray, it becomes easy for us to give them the authorization and let them do business across these domains. So that's how the unified regulator becomes very powerful. Another example could be the emerging space techs. So today you're talking about embedded finance, you're talking about say sustainable finance and decentralized finance, but there is a spatial finance coming in. You're taking space data sets, the geospatial intelligence, and that is getting fed into your green fintechs for greenwashing, to prevent that or to see that. Or the second thing could be the spatial information is given to agri-techs so that it gives better loans to the farmer, or crop insurance. So when you say loan, when you say crop insurance, you're talking about a banking activity and insurance activity, and all these are financial activities. So when you have a unified regulator, again, it becomes very easy to bring all of these together and add value to the ecosystem. So probably I'll take a pause here and give it back to Prashant, but I hope I drove home the point of what is this IFSC, IFSCA, and this unified regulator concept and the benefit which comes with it. Over to you, Prashant.
Thanks, Joseph. So with that foundation now, which makes the innovation pace and speed kind of a single window where we can collaborate more with the regulators and create new concepts. Now, the sandboxes has been one of the major enablers in the innovation speed at which we do things. So can you please put some kind of a overview about the roles of these sandboxes in the development of fintech ecosystem, and how is it shaping in the APAC region, and how exactly IFSC is supporting this key enabler for fintechs as of now? Joseph, you're on the mute, I guess. Yeah.
Thank you. Thank you.
Yeah. One thing, Priyanka, can you put Joseph on the main screen? I think she is not on the main screen. Yeah, please go on, Joseph.
Yeah. So when you talk about sandbox, right? What I was trying to say is sandbox are a very, very nice concept, especially for this fintech area. And especially so something called as regulatory sandbox. So there are different types of sandbox, but to drive home the point, I will focus on this regulatory sandbox for now. So when a bank applies for a license, there is a set requirements, like there are prudential norms and eligibility and a lot of criteria. And when they clear those, probably the license is given after all the due diligence and other processes. It's all carved out in stone, and it gets, refined as the days go by. When fintech came, finance and technology got mixed. This is that animal which is like moving at such a pace that regulators fell behind. They couldn't create regulations or regulatory frameworks which could keep pace with the way the fintech industry was going. So today you talk about neobanks, suddenly we are talking about BNPLs, buy now pay laters, and then suddenly there is something on cross-border happening, and this is only just in the banking space. Then if you marry it with markets, the capital market space, you're talking about alternate trading systems, crowdfunding, it just goes on its own way, robo advisories and stuff. And then you bring insurance, there's cyber insurance, insurtechs doing a lot of things, so it just becomes mind blowing for a regulator to have all the rules, to have it all figured out beforehand. So that's when we say something is a regulatory sandbox, what we mean is this is a very new innovation which is coming in for which we do not have the rules. So we have to relax the existing rules. So that's what we say as a regulatory dispensation. We kind of say that, hey, okay, we relax the rules for this particular innovation. We treat it in a boundary, a kind of a sandbox boundary, and we try to reduce the risk, because as a regulator, I have a fiduciary responsibility to ensure the consumers' interests are protected. The systemic risks are averted, right? The financial stability are all those things which is there weighing on my mind. So I need to kind of de-risk that. And that's how we kind of, craft this regulatory sandbox and the boundary conditions to make sure the risk is less. So essentially, you have a very innovative concept. We try to see if the regulatory sandbox is the right thing to do. And guess what? When you're in the regulatory sandbox, it helps the regulatory teams to also study that innovation, that fintech and their business use case pretty well from a close range in a controlled experiment, so that tomorrow we could create better regulations, probably the existing ones, we could amend it, or we could come up with a new set of regulations exclusively for that innovation. So that's where your regulatory sandbox really helps. And I think that's a very cool thing about regulatory sandbox, because I think FCA in the UK pioneered it, if I'm not wrong, Bank of England, and it has been pretty successful for the fintech side of it. Probably a little later, we can talk about the different types of sandbox. Probably I'll pause here and hand it over to Prashant. But then this is the basic concept about the regulatory sandbox.
Thanks, Joseph. So you have been closely looking at the innovations in the regulatory sandboxes as well as the overall fintech ecosystems. So what are the top key trends that you see currently in last year or two, and what do you see as a forward looking? There's a lot of innovation happening into the crypto space. There's a lot of innovation happening in the payment space. There's a lot of innovation happening into the pay now, like buy now, pay later space. The insurtech data, alternate data space tech. So if you have to kind of summarize the history of the innovation that was looked from your vantage point, how did it see in last couple of years, and what do you foresee happening into next couple of years, and the changes and the trends for fintech overall?
See, one of course, as I said earlier, there is this convergence theme, right? So that's why I brought in the word embedded finance. So right. You like it or not, it's going to get embedded everywhere. So, your fintechs, it could be in healthcare, it could be in any other industry as well, but embedded is going to be the way, right? So there's going to be a lot of convergence. So the things which I just spoke about, the space information coming down from space tech. So from a space tech to a green tech to an agri tech, just see the convergence which is coming in, from a fintech angle, right? So that's the big thing about embedded finance. Second, again, I touched upon it, sustainable finance. It's about climate. I know it's all over the place. So I think I might be preaching to the choir over here. I mean, it's the need of the hour, and we are going to see a lot of action on this. Probably in India, the regulators have not come very heavily with the regulations, but very soon you will see ESG disclosures. You will see a lot of metrics and taxonomy definitions and a lot of action around this sustainable finance thing. The third, of course, you touched upon crypto, and then of course the CBDC is on its way, right? So the decentralized finance, I mean, whether you like it or not, already more than $100 billion worth of projects are already going on, and it's only increasing. So DeFi is going to happen. Is the community mature? Probably not. That's my personal view. After what I have seen with Celsius and Terra and Luna and all those meltdowns which has happened, probably there's still some more distance to go to make it a pure play decentralized, because I don't believe it is pure play decentralized today, the way the original thought process was. But there is no pushing it down the carpet. DeFi is a reality. Metaverse is going to be a reality. Cybersecurity in metaverse is going to be a reality, right? So these are all things. Today, JP Morgan is there. You name a host of banks. A lot of them are already established shop in metaverse, right? Fashion, sports. I mean, everybody's going there. There's a lot of action happening there. So CBDCs, decentralized, definitely yes. And then, see, I don't want to get into very specific like BNPL and all those stuff, because these are all going to be evolving. Like some of these probably valuations were stretched, so some companies will have to die their natural death. There will be consolidations, but I think this profitable business models will continue. But overall, the way I look at it, I think it's pretty exciting times. It's a kind of mix which is happening here. So the convergence is clearly a theme. And then the other theme which is going to be very important is on the security part, the cyber security part, be it in the metaverse or in the current stage as well. And remember, quantum is also coming in, and they're going to destroy most of the blockchain security which we have today. So there is a lot of work which we need to do there, because as a financial sector regulator, I am worried if the core banking systems fail. I am worried if some of these financial instruments go for a toss with quantum. So these are some of the emerging. It's not happening today, probably, but 3 to 5 years from now, there's going to be a lot of impact on these things. So these would be my broad areas which we think we should look at. But then there is another angle too, the social angle, which we are probably not looking into, but we might want to look into. As data says, about 10-15 years back, Japan woke up to the reality that their adult diapers sold more than the baby diapers. Basically, I'm talking about aging. So the population there aged, and in other 8 to 10 years, in US, this is going to happen, right? And by 2040, 45, this might be a true reality in India with our aging population. More than 20% of our population, about 20% can be over 60, 65. So there is an area called longevity fintech, which is coming up. People are living longer. What are the things? Do we have insurance for them properly? What kind of financial services do we have? Products do we have? Do we have, can they take loans after they have retired? And the silver tech, as we call it at times, like the silver entrepreneurship, so much of experience, so much of money. Why can't they start a startup, a fintech, and get more jobs? So getting them back into the economy, not only just the healthcare part, but the financial part of it. These are some of the things which we really need to focus. And I see these are the trends which will kind of dominate in the days to come.
Interesting. So while discussing with you in previous conversations, you were talking about a concept like fintechs and tech fins. If you can elaborate this tech fin concept, because fintechs probably we have heard as a concept, but within the fintech entity framework that you have these two terminologies that you have been using. So if you can just give some understanding about the tech fins and fintechs a bit more, that would be great.
Right. So at IFSCA as a regulator, we can give license, approvals, authorizations, and the powers come to us because of the act and the regulations and the regulatory framework. But for fintechs, when we initially started, we found that, there was no proper regulation which can give authorization to them. And so that we kind of, if you want to say legally get them into the fold, right? So there is always this, I am in a no man's land with respect to regulatory stuff, kind of, sorry about that. So that's the kind of, framework which was missing, a regulatory framework. Now, what we thought was, hey, let's bring in a very broad-based, light touch regulatory framework, which will enable the famous Silicon Valley fail fast methodology. Now, let me explain this. I said broad-based, light touch, and I want to build in fail fast, right? So light touch is simple, right? If I'm going to give you a license or authorization, I do not want you to be giving me reports after reports, filling in all those regulatory filings and then increasing your cost of compliance. So it should be light touch. That's one. Broad-based, the sense I do not want to go in and say, like the example I said before, BNPL, I do not want to look into it. It's like much larger, like a lending, right? So I do not want to come up with regulations specific to BNPL, because today the flavor of the season might be BNPL, buy now, pay later. Tomorrow it could be save now, pay later, or you could take any acronyms which come in. So as a regulator, I do not want to be doing that. So it has to be very broad-based. And third, we said, yeah, we need to enable the fintechs to fail fast, not because we want to see them fail, but because we want them to pivot to something which is more profitable so that they really see success. Because probably the first time they don't really hit the bullseye, but after 2 or 3 iterations and pivots, they reach and become a unicorn, and suddenly they are the talk of the town. So that was the basic principle when we kind of set out to do a regulatory framework exclusively for fintechs. So we come up with this word fintech entity, and then we thought, okay, let's do it for fintechs, right? And we can give them authorization as a regulator. Now, when we researched on the basis of what the Financial Stability Board, FSB, says, they say that when you're a fintech, you are then very focused on the verticals. And the verticals here are banking, capital markets, insurance. So for example, if you're into the lending, you're a neobanking, you're doing cross-border payments, then it's a very good fintech in the banking space. If you're doing alternate trading platforms, if you're doing, say, for example, robo advisories, then you're in the capital market space. If you're doing insurtech, cyber insurance, so on and so forth, you're on the insurance vertical. So it's a pure play, like if you want to quote Harry Potter, that's like the pure blood, right? They are fintechs. But then, if you talk about regtech or cybersecurity or quantum, right? And things like DLT or blockchain, these are all not pure play finance things. They are pure play technology items, but they are horizontals. They are technology for finance. Cybersecurity is applicable for banks, for capital markets, for insurance, right? So that's a horizontal part of it. Similarly, you can look at other aspects, tech, primarily financial services, but again, horizontal, it's not verticalized, right? Longevity finance, the example I just spoke about, it's another horizontal. Quantum is a horizontal. Web 3.0 is a horizontal. So we thought the horizontals are technology for finance, and that's why it should be called tech fins. So fintechs are verticals, tech fins are horizontals. If I have to bring both of them under my regulatory framework and I give them an authorization, then I call both of them or the generic name as fintech entity. So now that is how the fintech entity has a tech fin and a fintech. Now, the last part, which I said fail fast, probably I can use this time to explain a little bit about the sandbox too, so you will understand it. So the fintech entity framework, while I'm giving authorization, I said light touch. So what do you mean by light touch? I just am expecting the business to be around for a year. I'm good enough. I'll give you an authorization. I don't want you to be for 3 years and show me, crores of profit, nothing like that. You need to be around for a year. And in the last 3 years, at least 1 year, you should have had some revenues. I'm not even saying you should have profitability. You should be revenue making. That's it. Because we know fintech sometimes are bootstrapped. They're just coming up the chain. So if you're of that stature, we'll give you an authorization. But guess what? Fintechs or tech fins, most of them like Web 3.0, DLT, all these upcoming areas, they have a lot of innovative things which are happening, things which have never been tried before. And I do not have a regulatory framework and I can't give an authorization directly. So what we did was we brought in this graded approach of creating sandboxes. So what we said, first we'll give them an innovation sandbox. I will give you a limited use authorization, which means you're not fully authorized yet, but you have a very innovative technology. Let me put you into this innovation sandbox with a limited use authorization. In the innovation sandbox, you can test out your technology with live market data as well, which we as a regulator could give. Say if you have a very fancy AI ML model and you want to really test it with live data, we could do with innovation sandbox. Probably it's not real time, but definitely it's a good piece of market data available. Now the next upgrade is the regulatory sandbox. So I spoke about regulatory sandbox. So now you have proved your concept. Now in the regulatory sandbox, what I'm going to do is I'm going to give you access to live customers and live data. So probably I will restrict the risk. As I said before, I'll have boundary conditions and I will say, hey, you can have probably 50 customers or 10 customers and your exposure should not be more than 1 million or 5 million, right? So we will put boundary conditions like that and we will let you work with customers who have given consent and other business partners. So if your solution needs a bank, then we tie up with a bank and some customers, and the regulatory sandbox, we try it in a very limited manner. And when you exit that sandbox successfully, that's when you get the full authorization. So basically you get into innovation, you exit it successfully, you get into a regulatory sandbox, you exit it successfully, you get into full authorization. So the first two is the limited authorization, and that is where I wanted the fintechs to really fail if it is not a good idea, because there is no point you setting up shop and going full-fledged only to know that the market does not want your product or services. So that's where this fail fast was built in this structure. So overall, the FE framework is for fintechs, tech fins, very graded approach, innovation and regulatory sandbox, and then the authorization. And now here is the catch. When I give an authorization, I want the fintech or tech fin to set up shop in the GIFT IFSC. But when you are in the innovation sandbox or you are in the regulatory sandbox without any need for a bank account to do financial transaction, then I don't need you to set up shop in GIFT IFSC. You can be anywhere in the world. And the reason is simple. If your product fails, then if you have set up shop, that extra cost of dismantling and the regulatory closures are going to eat out your brains. So we didn't want the fintechs or startups to go through this. We said you be anywhere in the world, be part of the sandbox. When you're completely exiting very successfully, and when we give authorization, that's when we want you to come and set up shop. So probably I took a little longer on this, Prashant, but I thought I want to give the complete picture of the motivation behind the FE framework of being broad-based and, light touch, and of course the fail fast. Over to you.
This was a wonderful bird's eye view. I think it is a great ecosystem for fintechs to experiment and see how the market reacts, how the regulator is reacting on that front. And now the other question that I had was we were discussing about what incentives IFSCA is offering to the startups. So how IFSCA is promoting the innovation from the startup ecosystem, apart from the sandbox and the wonderful job that has been done on the foundation piece. So what are the areas in which startups can get focused attention, mentoring, incubation support, sandbox support, along with some incentives, programs, etc. So if you can give us a broad view about how startups will engage with IFSCA and what levels, what various levels they will be able to engage, at what maturity they should be engaging, and overall process about how to apply for these engagements as well. That would be great.
Okay, so uh, So before getting into something specific to startups or fintech, the IFSC zone itself, I told it is a foreign jurisdiction and it's an offshore zone. So instead of going to Dubai or Singapore, you can come here. So which means naturally there is a very competitive tax regime there. So what I mean by that is in this zone, for 10 out of 15 years, you can choose which 10. You could choose to ignore the first 3 years or whatever, you know. So for 10 years out of 15, you get 100% corporate tax exemption. So there is no tax. So that's on par with, you know, some of these other jurisdictions we are talking about. There is zero capital gains tax. There is zero stamp duty. There is zero security transaction tax. There is zero commodities transaction tax. There is zero GST. So basically it's a 0, 0, 0 kind of a clean slate. And that's why it makes it very attractive, especially because the IFSC market is not to serve the Indian domestic market. The IFSC market is to serve the diaspora, is to serve the global clients, because you're going to deal only with foreign currency, not with Indian rupees, right? And if you are already having foreign clients, what better place than this in India, where you're getting this kind of a tax regime, right? 10 years of the 15, you know, completely zero income tax, corporate tax, as they call it. Now that's not just for the fintechs or the startups, it's for any institution, even for the banks coming in and all the other brokers and insurance companies, it's the same. Now we took it a step forward and we said for the fintech ecosystem, what can we do more, right? So we introduced for the first time in India, a financial sector regulator came out with an incentive scheme so that we could give grants to fintech. Now, there are some 6 different categories of grants which we had envisioned at that point in time. So basically what we are saying is if a fintech is in an early stage startup, an idea, we can give a startup grant. So that's probably, you know, it's a bootstrapped founder and we give them about say 15 lakhs or so. Then somebody comes and wants to do a proof of concept. This is a very extraordinary idea. Up to 50 lakhs is something which is put in table. For sandbox, there's a grant. Somebody comes with ESG or green fintech related concepts in the sustainable green finance world. Up to 75 lakhs grant is available for them. And then if some of our fintechs want to go global and get listed in the exchange. So you should know that in GIFT IFSC today, we have 2 international exchanges. There is no need to really go to a NASDAQ and get listed. You could actually come here and get listed. And for some of the fintechs who are trying to do that, we are giving a listing support grant of about, you know, 10-15 lakhs to do those basic road shows and stuff like that, because there's a lot of stuff you do before you go up. In addition to this, we are also supporting accelerators, because we believe if an accelerator can put in a cohort, including 10 or 15 fintechs, we want the accelerators also to benefit. And there is about some 10 odd lakhs for them to just kind of do stuff. So basically, I don't think as a regulator, we want to pump in millions of dollars. But during this funding winter for all those bootstrapped folks who have great ideas, we thought we should give them some small change to get started. That is the idea. And then the question you asked, how do we go about this? Right? To get these grants, you have to be a fintech entity first. So which means a fintech entity framework is your entry point. So if you go to our website or if you just search in the internet for a fintech entity framework of IFSCA, you will get a circular, right? The circular will have the general rules and overall stuff, but I think you should just focus on the annexure. Annexure 1, 2, and 3. Annexure 1 tells, okay, these are the illustrative areas we are looking at. That clearly says which is my fintech, which is my tech fin, which can come under my fintech entity framework. That's Annexure 1. Annexure 2 is you want an authorization. You are an established company doing business with foreign entities, you know, global. I can be authorized right away. I'm good enough. Then Annexure 2 is for you. But if you have a great idea, you want to get into the innovation sandbox and then the regulatory sandbox or directly to the regulatory sandbox, whatever it is, then Annexure 3 is what you need to fill and send it to that mailbox, which we have. The moment you send it and the processing is done, you become a fintech entity. We grant you the authorization. Once you're done that way, then you're eligible to apply for these grants. There is a separate application process and guidelines for it. And we have a very high-powered committee, like an international committee. It's a 10-member committee with people from 5 nationalities, right? So that kind of a mix is what it is. And the committee kind of recommends what kind of grant, to whom, how much, what quantum, and stuff like that. So that's the big picture of it. And probably at this stage, since we also spoke about the sandbox types, innovation and regulatory, I want to add one more, like the way you said, the fintech bridges we are building with other regulators. Very recently, the Deputy Prime Minister of Singapore, who is the PM designate, visited Gift City, and we signed a fintech cooperation agreement. It's a very unique one, and this was signed between IFSCA and MAS, Monetary Authority of Singapore. So Mr. Swapnindra Mohanty was here, and I know we signed the agreement and exchange in front of the Excellency DPM. Essentially, what we are saying is 3 tiers. Tier 1, MAS can refer fintechs from Singapore to India here, and we as IFSCA can refer Indian fintechs to Singapore, and MAS will handhold them. So fintechs getting handholding by the regulators themselves through this referral mechanism. So that's tier 1. Tier 1 is a common one. That's a fintech bridge which happens all around the world. Tier 2 was innovation which we did, where we said a fintech can apply at the same time to both the sandboxes, right? And we will process it at our respective ends. And if there is a cross-border use case, both the authorities will come together and evaluate it and see if we can have a sandbox of MAS and sandbox of IFSCA together as a regulatory sandbox so that we can test this cross-border use case, the innovation. So that's tier 2. And then we pushed the envelope a little bit further and said in tier 3, let's go for a global regulatory sandbox where it is not just about IFSCA India and MAS Singapore. Can we get from other jurisdictions, from G20 and other places, so that we create a global regulatory sandbox, because there are a lot of problems and use cases which need global collaboration. Cross-border data flow, your climate might need a lot of help. Crypto, definitely we need global collaborations. It cannot be done in one jurisdiction. So these are great candidates for GRS. So that's how we have signed the agreement, and we look forward to leverage that in the days to come. So with that, I'll hand it over to you, Prashant. I know it took some time, but I thought I'll give you everything.
Thanks, Rishabh. It was wonderful. The complete stack, right from the understanding of unified regulator and how IFSCA is creating that kind of a framework, and then on top of that, what are the like key properties of that low touch and other things that you spoke about. On top of that, how the tax regimes are discounted tax regimes are promoting the investments into the IFSCA, and on top of that, how the startups, the innovation ecosystem, not just the startups, the innovation ecosystem is building on top of that, along with the grants that IFSCA providing. So one of the key questions that I had was the corporates like FIS, which are product companies, and startups also need some kind of a bridging. So are you working from IFSCA as a regulator? Are you working to bridge these players, let it be VCs, investors, corporate startups, in some way or manner? For example, in the sandbox, if is there any role that large product companies can play to embed some of the products and some of the gateways and interfaces that we have, so that it becomes more focused, I'll say, not just enabled by IFSCA sandbox, but it is enabled by large product companies who would like to leverage the fintech innovation in collaboration with in a collaborative manner. And over and above that, if there is any way that your current ecosystem is trying to bring the VC ecosystem. I know that there are these areas probably are away from regulators area, but given the innovation vehicles that you have been using, what sort of flavors do you anticipate, or are you planning for? Are you existing vehicles which you have, which can be used as a platform for larger product companies to work with the startups which are in the early stage in IFSC ecosystem?
Well, that's a good one, Prashant. So, I just need to step back to give a flavor here before answering that question. So as I said, IFSC is a very unique jurisdiction here, right? So what's the market we're talking here for a fintech, right? So we are saying Indian fintech who wants to go global, this is the place to be. We are saying a foreign fintech who wants to come to India, this is the place to land. So one is the launch pad for Indian fintechs going global. The other is the landing pad for the foreign fintechs coming here, because it's the rupee convertibility challenge is not here. They can bring their own currency and repatriate it without any issue. There is no foreign exchange issues because RBI does not control IFSC jurisdiction. So there is no FEMA violation here when you bring money and take it out. But when you bring it to India, it's like bringing money from Singapore or Dubai to India. So moving money from IFSC to domestic India, it's like RBI's FEMA comes in because RBI is a regulator. So that's the second use case. So we have India fintech or Indian fintechs going global, number one. And second, we have foreign fintechs coming into India here. The third is the IFSC jurisdiction itself. Today we have more than 350 plus companies here, and this is all financial service companies, banks, all top-notch banks, right? Very recently, JP Morgan came in, MUFG came in, Deutsche. You know, you have you name them, like even our Indian banks, like private banks like ICICI, HDFC, SBI. It's the ecosystem is here. We have two exchanges, brokers, we have insurance companies, and then all the other peripheral things. So these are the three key elements here, which we are talking about. Now, to answer your question, can product companies come and offer their sandboxes? Absolutely, yes. In fact, I'm not naming them, but I'm talking to some L1 chains, L2 companies who are more than happy to come in and set up the chain so that Web 3.0 startups can start building on that. So what we do is we typically authorize them, right, as a fintech entity, because we could do that, right? Or if they do not want to set up shop here, we could give them a limited use authorization to try it out in a sandbox kind of an environment for a year, because sandboxes typically maximum goes for a year, right? And then let them see whether it is profitable for them, worthy of an office here, and then they can upgrade to an authorization. So there are talks going on. We didn't go to, large players like FIS and others who already have very strong platforms, because you have a vibrant ecosystem, but we would more than be happy to welcome players like that. I believe some core banking products did come in. Edgeworth, the Infosys subsidiary, is one of the companies for whom we had given the authorization sometime back to try out their core banking stuff. They were trying to do some buyer credit optimization on blockchain. So there are some innovations happening with very established names like Infosys, Edgeworth, and some very new names, in the quantum space and other stuff. So we are open for everything. It's not that, we will not allow people, because we are here to help the ecosystem thrive. Being a regulator, I will not have a commercial interest. My interest is to help the ecosystem thrive, because end of the day, if the ecosystem thrives, our economy thrives, right? We have a $5 trillion goal. It'll create direct and indirect jobs, so that's the angle we as a regulator look at. So we are open for partnership. And the last one, when you talked about VCs, yes, that's definitely there on our radar. We didn't pursue it aggressively for the obvious reasons you quoted, right? But we did get into an MOU with GVFL, Gujarat Venture Funds Limited, and and we are trying to work with the president and other folks there to see the entities which are come here, the fintech entities, can they be given a look for some funding from some of these VCs. In fact, in our Annex 1, the fintech entity framework, if you look at the kind of illustrative areas, I have listed fraud detection, KYC, digital identity, space techs, all these as permissible activity. And I have had VCs who wanted to invest in space techs. And what more do they need? And for the space techs, just as I said, the MAS MOU, we have signed an MOU with Department of Space, where ISRO is helping good space techs. Now, isn't this a perfect cocktail for the VCs, where a financial sector regulator is there, ISRO and InSpace, the space guys are there and they are helping them give the authorization for the space techs, and they could just come and invest in them. So there are some lot of VCs who are showing interest like that. So it is going to grow. We are also going to reach out to the VC ecosystem to set up shop. No doubt about it, because at the end of the day, we are looking at a holistic growth for the ecosystem. So it is about VCs, it's about mentors, it's about setting up accelerators, and so on and so forth. So that's the larger plan at the IFSC side here.
Thank you, Joseph. So for the Innovate 48 Partner Edition, we approached you to get the help from IFSCA, and we were very pleased to see all the support that you have provided so far. So in fact, Innovate 48 Partner Edition that we conducted, the launch event itself was attended by more than 35 countries, around 3,500 views happened on the platform. We have around 200 plus startups which are participating in this hackathon. Or ideathon to be more precise. And this is something which we are happy to kind of tell the certain incentives from IFSCA, but I think if it comes from you, it will be more articulate as well as more precise, more kind of descriptive as well. So over to you, Joseph, about what kind of a support for Innovate 48 Partner Edition can be expected from IFSCA for the winning startups and winning ecosystem that we are trying to develop here.
Right. So when FIS approached us and a brand like FIS, which has been doing pretty well in the innovation space, right? Your track record is there, right? Starting from Florida to all over the place, from your headquarters. We felt that we are all talking the same thing, wearing different hats. So we are also talking about growing the ecosystem, the innovation ecosystem here. And that's why we decided to partner with FIS on this IN48, because typically as regulators, there isn't much incentive or pressure for us to participate in events like this, because our job is to create the rules, the regulations, ensure supervision and compliance, and then enforce, and that's the life of a regulator. But here we are also putting in the hat of a let's say a development regulator to develop the ecosystem. So that's where we felt these are very essential. Now, what we are planning to offer to the winners and probably the most promising startups from this edition, the IN48 Partner Edition, is we want to give them a direct entry into either the innovation sandbox or the regulatory sandbox. So typically you apply and there is a long process, but then when you have such tie-ups, then you get a kind of a green channel where we already know that this has been vetted by a partner like FIS and their jury from the industry. So it's a little less of heavy lifting for us. So basically we could give a direct entry into the innovation and the regulatory sandbox, which essentially means if it's a mature startup, they are coming into the regulatory sandbox. They're going to work with either banks or capital market institutions or whichever based on their use case and live customers in a smaller scale with a regulator backing them. Now, what happens is when startups, I know when I've been interacting with people, when startups get this authorization from the regulator, be it limited use or full-fledged, once the industry knows or the ecosystem knows that a startup is backed by a regulator, one, their ability to raise capital increases, their valuation goes 3x to 5x more. Second, their customer acquisition costs come down because they know that there's a regulator behind it. So the customer protection and some of those things are taken care of, right? And then of course the credibility, so that's why I call it as 3 C's. Your capital, your customer acquisition, and your credibility actually goes through the roof because a regulator is backing you, right? There are some checks and balances. So that's what we wanted to give to those winners, right? The entry into those sandboxes. And the moment you get this entry into those sandboxes and you become a fintech entity, naturally you will be eligible for all the grants which I just spoke, right? So that's the other one which I want to do. Now, while these two are there, you also have the opportunity to serve the customers within this IFSC and also globally, the diaspora, the Indian diaspora or other jurisdictions too, in a very tax-friendly regime. So I think it's a very heady cocktail for any aspiring kind of a fintech. And before handing it back to Prashant, just want to let you know the topics which IN48 had also was pretty exciting for us. I know there is this new regulator in UAE, the WARA, the Virtual Assets Regulatory Authority, for the virtual part of it, and they were trying to get into the metaverse, buy a piece of land and stuff like that. But before they could do that, I would want to place on record over here, the FE framework had already listed metaverse as one of the accepted areas for us. So this essentially means we are not buying land in metaverse. We are ready to give authorization to companies which are working or startups which are working in the metaverse area, in Web 3.0 area. So probably we have one of the first regulators in the world to have a regulatory framework for Web 3.0, metaverse, and all the other areas like space tech and quantum and all the stuff which I just said, in addition to the fintech stuff. So I think that's what this group can leverage, because digital assets, it's one theme, AI is another theme. So all very relevant themes. We found it to be a perfect match to our focus and the ecosystem build path which we have. And that's where we are committing this with FIS for this IN48 partner edition. So that's pretty much what we think we can bring to the table. Of course, the regulatory handholding, and now that we have signed something with MAS, if some of these are really good, we will not have any hesitancy in referring them to MAS, so that these very firms, these fintechs or the startups, can actually set up shop and explore the Singapore market. And let me tell you one more thing. MAS is out there in public, but we are parallelly working with many other fintech bridges with other jurisdictions too. Even that's going to be open. Because of confidentiality, let me not reveal the names today, but those will come out in the days to come. So that's the kind of package is what we're looking at, Prashant. Over to you.
Thank you, Joseph. This was wonderful. I'm sure that startups which are in final round will take advantage of this unique opportunity to not just reach out to IFSCA, but via that channel reach out to multiple different sandboxes with the incentives that are in place. Now, one of the areas, Joseph, that we discussed slightly, distance from the regulatory areas, which is the innovation landscape and how open banking, open health, open finance, open data ecosystem. And I like when we interacted last time, I like the the way you presented how things are shaping up. And I think a very similar, I'll say, interaction or topic was handled by Sapnendu also, how the landscape of innovations is supported by open banking, open health, open finance, and towards open data. So as a conclusion of this, if you can just summarize the same discussions that we had about how innovation in open banking, open health, open finance, and open data is going in terms of the journey that we are taking. So we started with something which is open banking in India. Now account aggregators are coming, and then we have health ID as a second tier on that. Then we have open finance, and now probably we'll be moving to the open data. So ONDC, then the account aggregation, then health ID, credit bureau. These are the things which are not necessarily related to IFSC as a regulator, but in your personal opinion, how these key pillars are shaping the India innovation in fintech. If you can just give kind of a overarching picture from your vantage point, that would be great.
Absolutely, Prashant. But before I jump into your specific ask, I just got a question. I mean, probably I'm not sure if it's supposed to come through, but there was this, but I thought I'll answer that and then go on to your question. So the question was, surprised with your statement, no RBI involvement for cross-border fund transfer to IFSC. How is it possible? Right, so that's very much possible. And let me just clarify again. So IFSC is a separate jurisdiction. So just take an example. If you're bringing money from US to Dubai, and if you're going to take it out of Dubai to some other place, why should RBI be involved? Because Dubai is a different jurisdiction, US is a very different jurisdiction, and they have their own regulators there monitoring those, isn't it? This is exactly the same way. IFSC is a separate jurisdiction where IFSC is a regulator. So if you're bringing money in here, we as a regulator would be aware what you're doing. because the banks and all those networks are with our regulated entities. And if it is going out from IFSC zone to another location, again, IFSCA will be aware, but RBI will not be aware, just as in the previous thing. But if you're taking money from IFSC into domestic India, which is RBI's domain, then RBI's jurisdiction, they will be aware. So that is the subtle difference. That's the beauty of this entire IFSC creation. It's about offshore coming to onshore. And that's what I was trying to drive. So I hope it answers that to the question as to, why RBI will not, because yeah, in some way RBI will know. And I'll tell you how. If it is a bank, an Indian bank, which is home regulated by RBI and their subsidiary or a branch is over here, they might have to report back to RBI, right? Let's say ICICI Bank is there in India, regulated by RBI, and if they have a branch here, they might have to report. But imagine you have a JP Morgan and coming and setting up here, they need not report to RBI, they will report to their home regulator. So you need to understand the beauty of these jurisdictions. Now going to what Prashant is saying in the interest of time, see, I spoke about the unified regulator thing. So probably the sequence, the open health, I will push it a little down. So the sequence is like this. Open banking, we are seeing a lot of innovations there, like as you said, account aggregators coming up. Now SEBI is also joining account aggregator. So what essentially it means is, from open, and tomorrow you'll have insurance guys coming in, right? So from open banking, slowly open markets to open insurance is what you're done now. So this is the unified concept I was talking about, right? So account aggregator, like in UK, you had PSD2, right? And then today ONDC is coming in. So the kind of India stack which we have built and the way this is entirely flowing in, you could actually create an open finance kind of an ecosystem. So very much possible. Banking, open markets, open insurance, I get an open finance. So as a unified regulator, I'll be able to see across the finance sector. Today in domestic India, RBI sees across banking, SEBI sees across capital markets. Probably this open finance is still 2 steps away, right? Whereas as a unified regulator, we could try to take that view. But guess what? After you have open finance, then with this open health, all those Ayushman Bharat and all those things coming in, and look at all the telecom revolution which you're doing with 5G and IoT coming in. Look at the data which is all going to come. So this open financial data of an individual or a firm or an entity and their interaction with health or other utilities, telecom, all of these things together creates a very propelling, promising open data ecosystem. There is data all across which is connected. So that's when the statement which we say, right, data is the new oil really becomes a reality. Because today we're just starting the game, but I see a lot of ways by which open banking and open insurance all together with the open finance as one umbrella, then health, utilities, all those things coming together with your IoT, industry 4.0, industry 5.0, it all comes together. And then really you have an open data ecosystem where things can all talk to each other. And that's where I hope the data privacy, data protection laws comes in, like the way the GDPR is there in the Europe and so on and so forth. So all these things together will make it a very good ecosystem for us to really leverage the data being the new oil cliche. That's how I would put it, Prashant.
Thanks, Joseph. It was a wonderful conclusion. Actually, it gave a very broad picture how all these building blocks are getting kind of put together. And on behalf of IN48 Partnership Team and FIS, I really wanted to thank you for your involvement and all your support for the IN48 startups and the broader startup ecosystem. Thank you very much, Joseph.
Thank you so much, and all the very best to the startups and your initiatives, Prashant. Thank you.
Thank you very much.
Thank you, Joseph.